Hello traders, hello everyone, and welcome to our new video surfing the Elliott waves, where I'll look at some of the most interesting structures for this week. This video has been brought to you by Orbex. I will cover Euro dollar, New Zealand dollar, crude oil, DAX, and gold. Firstly, let's take a look on Euro dollar. As you know, we've been turning bullish for the last few weeks, and the reason was based on, if I give you just a quick review here, based on two different interpretations. Even if this current bounce would be seen as a counter-trend movement, it should be made by three waves against the previous 5-wave fall, which can be as a leading diagonal. So maybe in this case, we should pay attention to this trend line, potential resistance around 1.2230 level. The second wave count suggests that this pullback and overlapping price action was actually wave 4 as part of a higher degree incomplete bullish impulse. Here, what's really fascinating is that the 38.2% and the former wave 4 were in very similar area. So both wave counts suggested that we will see a bounce. And what is the most important at the moment is that we are seeing still only one leg up as part of a higher degree minimum 3-wave recovery. So even if this is still a wave B, there should be more upside after pullback. Even if this will be wave 5, well, in such case, there will also be more upside after retracement. We can see that price is now currently at this potential trendline resistance. So of course, there's a perfect timing for potential correction. Of course, I'm not expecting anything significant ahead of FOMC tomorrow, so we'll have to wait on potential pullbacks for a few more days. Now, what I'm looking at or referring to is potential that we are here in the final stage of wave 5 of this first leg that is part of a higher degree 3-wave movement. Okay, so of course this could also be adjusted a little bit, and maybe we get another high here for to complete maybe this first 5-wave cycle, and then you will see a pullback. But what is the real idea here actually is to stay bullish, but just be aware that we could be in the very late stages of these current cycles. So of course I favor to wait on pullbacks and then look for potential longs from lower, better support levels. Now let's take a look. Also, we said New Zealand dollar. Now we have it, New Zealand dollar. Here we are. Now New Zealand dollar is in a strong uptrend, I believe, and New Zealand was actually one of the best performers for the last few weeks. Overall, I think that that New Zealand could stay here in uptrend. After all, there is still a very strong recovery unfolding away from last year lows, and what is the most important is that the pullback was here in 3 waves. We have seen a 50% retracement, not only 38.2, but that's fine whenever you have this wave 3 very similar or maybe even smaller compared to wave 1. So that's when you can expect that wave 4 will be deeper. But still, the most important is we are reversing higher away from this fib level. We broke this trend line resistance, and if you look at the 4-hour chart, you had a very nice clean 3-wave drop, and this is also characteristics of an impulse. Why? Because we have one very strong lag here in the middle with no overlap between correction. So in my opinion, this is an impulse, and I would be expecting more upside after any pullback. Of course, this could be your first support, the trend line, and then you have also these minor swing levels. The ideal resistance that we should pay attention on is right here at 72.70. So this could maybe cause some pullbacks, and ideally the next opportunity will be when we are going to see a similar pullback compared to this wave B length that was part of this downward movement. Now let's take a look also on crude oil. Now crude oil is coming nicely to the downside. We've been highlighting this potential resistance 61.8 and 78.6 fib retracements that limited the upside here, and the reason was very simple. I mean, when looking at the daily chart, you can see that we are tracking wave 4. Now, if I would say that wave 4 was finished here, well, then wave 4 would be quite small and not so long in time compared to wave 2, which is not the best formation when it comes to Elliott wave principle. Wave 4 is usually much more complex compared to wave 2, or maybe even longer in time, or maybe even deeper in price, of course. So that's why I'm thinking that this wave 4 is still underway. Of course, can be a deep ABC pullback, or we will just stay consolidating here. This could also transform into a triangle, but the idea is that this is a pose with an ongoing uptrend. However, this pose is incomplete. Why? Because, as I said, this was a free wave rise that stopped at this resistance. So this is now your key level, 64.30. As long as this one holds, I think that there's even a chance for more weakness here into wave C, or we will stay sideways here for a big triangle, as I mentioned. But overall, you have 5 waves down here from the highs, and this was a free wave rise into resistance that actually held. It caused a reversal, and that's the most important evidence why we should remain very careful here and be aware of more consolidations in the next few weeks. Now let's take a look also on German DAX. Now stocks are definitely still in uptrend. I'm seeing room for much more upside, but looks like that in the short term we could be facing some resistance or deeper pullbacks. But again, this will be pullbacks only on the way up. Now on a 4-hour chart of DAX, I have a very clear pattern here. I believe we are keep rising. We have higher highs, higher swing lows, which makes this an uptrend. And of course, the most important thing, you don't have any overlaps between these corrections. So this was your correction, this is correction, this is corrections, and these are the smaller corrections, and you have no real overlaps between those pullbacks. So this makes trend very strong, means that that's an impulse. Impulses are 5 wave patterns. So if I look or track the rise from January lows here, then I cannot count 5 waves up yet. Well, this was wave 1, you had a wave 2, and looks like this extended lag can be wave 3. So if wave 3 has finished, then you are now in wave 4. Wave 4 can retrace for 38.2% and sometimes can be very similar in distance compared to wave 2. So if that was wave 2 pullback for what, 500 points or so, this was a pullback for a little bit more than 400 points. So I would not be surprised to see more downside, because of course wave 4 can be sometimes more complex and deeper compared to wave 2, and still we have the 38.2% a little bit lower. The 15,000 level is also very important psychological level, and most importantly, wave 4 is a corrective leg. It should be made by 3 subwaves. So of course I'm expecting more weakness, but even if market is going to see more upside straight from here, that's fine with me, but just be aware that this consolidation can see a deeper pause here before the uptrend may resume. And now finally, let's take a look on gold. Now metals have seen a very nice turn to the upside recently, as the 10-year US notes found some support. Of course, this higher metals and commodities overall, like copper, for example, this is all very positive for commodity currencies. So that's why I'm also remaining bullish on Aussie and New Zealand dollar. And if you look at the updated chart here on gold, you can actually see that we are reversing higher away from this trend line support. Also, the drop here was clearly overlapping. Okay, so I think this is a correction. Stocks are very expensive. We have seen move into very strong levels, while we haven't seen any progression higher here on metals. So sooner or later, I think that there will be a rotation back to metals, and I would not be surprised if we see actually break out of this downward channel here. Now looking at the 4-hour chart, well, there was a nice first reaction higher here away from March levels, and then we just keep moving higher after those consolidations. And now the question is this move to the upside already finished, a 5-wave structure, or is this wave 4 now still consolidating like a wave 4 and like a triangle, and we will see more upside into wave 5? In either case, I think that gold is going to stay bullish here, either after this wave 4, which could be already forming a base here above 1760. If suddenly we drop from here, then still I would be bullish. I would just probably readjust the wave count like that. I would say that first 5 wave movement is finished, and then we could either continue higher from 1750 retest, or maybe even deeper 1722. In either case, I think that this is correction on the way up, and that uptrend here could resume as long as we are trading above this $16.77 per ounce. Okay, so I'm looking for now as a pause on the way up. Traders, thank you very much for your attention. I hope that you enjoyed this video. If you have any questions, please let me know in the commentary below this video on YouTube, I believe. Thank you and have a good day. Bye.